We'll discuss about one of the sum from cash flow statements. This cash flow statement helps us to analyze how the business how the cash from operation is the position of the cash is better or not, and it helps us to ascertain the projection of cash from for the future also. So this is one of the sum from NCERT 12th Accountancy cash flow system. So okay, I will try to explain as much as detail as possible with the basic understandings as a practical applicabilities and all the connectivities also. The first thing in this sum, you can see that Radha Limited made a profit of 1 lakh after charging depreciation of rupees 20,000 on assets and transfer of general reserve of 30,000, and then the goodwill amortized for 7,000 and gain on sale of machinery was rupees 3,000. The first thing before calculating cash flow from operating activities, we have to calculate net profit from operation, because this net profit is, for example, see, for this is my workings. I'll try to put all the workings here and delete it off. Okay. For example, my net profit for the year is, you think, 1,50,000, but 1,50,000, but this 1,50,000 profit, you think. So this profit is this profit arrived from trading, and there is a multiple operating expense also. For example, depreciation, I have reduced some $10,000, and amortization like some 3,000, and patent 5,000, rent 2,000, salary 1,000, then sale of machinery. This is a profit, you think. This is sale of machinery profit of rupees 3,000. So these are all are negative. Means I'm getting this all are, I'm lessing it off minus 4,000, minus 1,000. This is a profit, right? So after calculating this, your net profit is 1,41,000. But for this is okay when you're having a P&L statement, when you're submitting a financial statement. But for calculating the cash flow statement, we have to ascertain exact net profit from operation, because see, this depreciation is non-cash item. Means there is no any cash is being given out, went out from this, right? When you're posting an entry, your entry will be depreciation, debit of rupees 1,000, and FA computer, you think you're used for computer asset, so 1,000. So do you see anywhere there is a cash outflow here? It's depreciation, debit all expenses and credit all incomes. Because see, you can see this there is no any cash involved in this. So this is a nominal account, so debit all expense, because so it is debited, and computer, this is an asset. Then when there is a decrease in asset, it is a credit. So there is no cash involved. So this is a non-cash item. Likewise, this amortization also is non-cash item. Patent also is non-cash item. There is any cash is not involved. So this rent is operation. So I'm using some office to pay rent. So this is an operation item. So this has to be included in the profit, net profit, and salary as well. But the sale from machinery, you think this 3,000 rupees is there? No, this is for example, Radha Limited is they are working under like producing and selling a charger, you think. So whatever the profit arising from selling of this charger will be your cash from or a net profit from your operation. But the sale of machinery is not related to your operation. This is something apart from your operation. So this is a non-operation item. So we should remove it off. So after calculating all this, for this is a financial statement net profit. So for you can just interlink this 1 lakh is there. No, this is nothing but your 1,41,000. They are telling this 1,41,000 after using depreciation, general reserve, and amortization and all. No, same way this how much you have here. See how much you have here. 1,41,000. But actual cash from operation or profit from operation is this. See, you have to remove. You have to remove this. You have to remove this. And if you remove this item, exact net profit from your operation is only 1,47,000. But When you put all your non-cash item and non-operation item, your net profit will be 1,41,000. Understand, right? So first item, so rather net profit for the year. For the year is, you think you have 1 lakh. So now what you're gonna do is you have to add whatever there are a non-cash item. For example, they are telling depreciation. So depreciation 20,000. Then this general reserve. General reserve is, so what is general reserve? For example, after this 1,41,000, you will appropriate this net profit to some of the reserves. For example, you will have some GR, some 10,000 debenture reserve. This is something like you will put some money. You will keep your money some to some reserve so that in future any expenses comes out, you can use those reserve fund to that respective expenses. So debenture, you think you 5,000. After that, you will have one. So 1,20,000 is net profit, right? So this 1,20,000 is after putting aside this general reason debenture, you are getting 1,27,000. But this is also, there is no any cash involved in this. This is just a transfer entry from your net profit to general reserve. So you have to add back this because this item is reduced from your net profit, right? So you have to add back this general reserve to your. So I'm just adding back my 30,000. Then your goodwill amortization. So goodwill amortization also, I'm adding it back 7,000. Then sale of mission. So all these items, see, all these items are there now. So you can put these shapes, whichever shapes you want. So you can see. All these items are there, right? All these are non-cash items. I mean to say non-cash item. There is no any can, because for in your statement, cash flow statement, inflow and exflow, exactly there should be involving any cash flow, then only you can use that expenses here. So all these are, there's no any involvement of cash, right? Do you see any involvement in cash here? If you see your journal entry also, there won't be any entries. If you post this amortization, what your amortization entry will be like this. Amortization entry 7,000. So goodwill, this is your asset. Goodwill will be 7,000. So any cash involved? No, right? So the 7,000 also should be added back. So you just, so this 1 lakh is after deducting this item, you have got 1 lakh. That's what they're telling. So now you're adding it back. So next one more is cash gain on sale of machine rupees 3,000. So they're telling you have gained a 3,000 from out of your sale of machinery. Means you have received a profit. So when your non-cash item you're deducting out of your profit, your non-operation item, what you would have done, you would have added back. You would have added, right? See this item you would have added here. So same thing, you should add it back. So sale of machinery profit. So how much you got it here? Minus 3,000. I mean to say, so net profit from operation. So your net profit from your operation is 1 lakh plus adding 57,000 minus 3,000. So 1,54,000 your net profit from your operation. This is what that is. Okay, I'll delete these items. So for next thing you can understand. So sale of machinery. I'll try to see. Okay. So next item, what they did after this net profit, you have to calculate some of the days. See, you have to use current asset and current liability. Current asset and current liability is nothing but which will expire, which will converted into cash equivalent within an year. For example, so only we will use trade receivable, all the current asset and current liabilities as a cash equivalent only. So first item they are telling trade receivable showed an increase of 3,000. So when there is an increase in, so this is a formula or you can keep it. Increase in asset, decrease in cash. Decrease in asset, increase in cash. So first thing what they are telling, trade receivable showed an increase in 3,000. So they are telling there is an increase in cash. So when you post an entry, when you're making a sale entry using, what you will happen? What you will do a sale entry? So sale entry will be like this, right? For example, customer A, I'm selling it to a product to a customer A for rupees 3,000. You think? No, you can see there. You can tell 10,000. You sold it. So sale revenue entry will be my 10,000. So after this customer had paid back to me some 5,000. You think? So my entry will be cash. I'm receiving 5,000. Customer, my debitor or trade receivable or bills receivable, all are same. So 5,000. So see, this is simple vices. Now this debitor means this trade receivable decrease means it is a credit entry. So when there is a decrease in asset, there is an increase in cash. So cash is coming in. You can see here, cash is coming in. You can see here, I'm just highlighting it. You can see here, 5,000 is cash is coming in and your asset is decreasing. So decrease in asset, increase in cash. Same thing. Increase in assets, decrease in cash. That's how it is a vice versa. So trade receivable. So what I'm doing, so now what they're telling is here, trade receivable showed an increase. So increase in cash is nothing but decrease in cash. So 3,000. This is for current asset, right? This is for current asset. CA, C. Now current liability. Decreasing liability, CA, current liability, decreasing cash. Increase in vice versa. Decrease in CL, increase in CL, increase in. So for example, now what I'm trying to do here is you can see here. Now I have purchased something from one of the materials. So purchase upon 10,000, you think, or 5,000 to vendor B. From vendor B, I purchased. We'll do one thing. This journal entry, I put it here. Okay, this is it. So 5,000. So this is my debit, 5,000 purchase entry. This is vendor B, accounts payable. So whenever there is an increase in liability, it is a credit entry. So I'm putting 1,000. So when vendor, I'm paying to my vendor. You think vendor B, I'm paying. So when paying, what will happen? Same thing. Now I have to see. This is the decrease. Liability account decrease. Now it is getting decreased, right? So decrease. I'm paying 3,000. So my cash account also will decrease. So that's what they're telling. When there is any decrease in current, see this current liability is decreasing, right? So decrease in cash is going out. Same way when there is an increase in liability, cash is coming in. This may be in credit item. So always see cash equivalent, whatever we are using it as a credit line item also will be considering as a cash only. Cash and cash equivalent. That's why if there is no any cash involved, it's also there is an increase in cash we are telling because we are receiving the funds, we are receiving a material in fund. See, I have received something like for making a charger, I would have received some material here, right? So that material is nothing equivalent to cash only. If I sell in the market, I will get a cash. So only we are telling that when there is an increase in cash, increase in liability, there is an increase in cash also. This need nothing but if I'm not mentioning here cash because there is no any cash involved in it, but equivalent to cash of that material is involved here. So there is an increase in cash. Here there is a decrease of vendor. I mean to say that out of 5,000, there is a 3,000 is reduced out of this, is right? So 3,000 is reduced, but cash is going out. So cash is going means when there is a decrease in vendor, there is a decrease in cash. That's why you can see here. So what they are telling you, trade payable increase in 6,000. So see, this is increase. So increase in liability is nothing but increase in cash. Trade liability or trade payable, creditors, everyone are same here. So 6,000, I'm adding it. Then prepaid expenses are increasing. So here we'll consider prepaid also is nothing but as a cash equivalent only as a current asset. So 200 increase. What I told you before, when there is an increase in assets, there is a decrease in cash. So now your cash is prepaid expenses. Prepaid expenses means what? For example, prepaid expenses. I have paid my rent in advance. You think so? Rent 200. You think prepaid rent. So what is happening here? So your prepaid rent decrease in here. This is a asset entry. This prepaid is the rent is an asset, but prepaid rent is what is happening here. This is the credit entry. So your asset is decreasing. So as per formula, what is happening? Decrease in asset, increase in cash. So here prepaid rent is decreasing. So your cash is increasing. That's why prepaid rent increased, my cash increased. Sorry, prepaid rent decreased, my cash increased. See this, you can see here. This is a journal entry. If I'm paying my rent in advance, so now my prepaid rent and this entry will be my prepaid rent is decreasing. So so when there is a decrease in current asset, so there is an increase in cash. So 200. So outstanding expenses, a decrease of 2,000. So outstanding expenses, you think. So outstanding expense nothing but accrued expenses. Now, for example, something like the salary outstanding or any outstanding amount I have, you think. So salaries outstanding 2,000. So you can tell 2,000. So decrease in outstanding is nothing but decrease in cash. Okay, you got it right. So it is a simple one. When there is a decrease in asset, increase in cash. Increase in asset, decrease in cash. Same way, liability decrease means there is an outflow of cash. When liability increase means there is an inflow of cash. It doesn't mean that you should have a cash only here. It may be equivalent to cash. You are purchasing some material, when you're selling that material separately out market, you will receive a cash, right? Even though it is in a credit line item. That's what they're telling you. Okay. So outspend, always the outstanding, for example, approved expenses, nothing but your outstanding expense. For something like rent, or you can say salaries 1,000 and outstanding. So this is a current liability. You think outstanding is a current liability, right? So here what is happening? Increase in liability. So increase in liability, nothing but your increase in cash. So decrease in liability is nothing but decreasing in. So now what I'm doing? Outstanding 1,000 cash, or cash value you can tell 1,000. So now here this outstanding expenses decreased by 2,000, right? So so this liability is getting decreased, then your cash is going out. That means to say it is an outflow. So decrease in liability is decrease in cash. So this is minus 2,000. Got it? So if you put together all this, how much you will have? 1,200. Net flow. Okay. So if you put here, net from operation put together of this 1,200. So cash flow from operation is equal to 1,55,200. This is simple. So you can tell this as like current changes in CL, current asset and current liability. That's it. So you understand, right? See, this outstanding salary 1,000 outstanding. This is a liability. So what as per the our formula? So there is an increase in accounts payable or increase in liabilities. There is an increase in cash. Here they are telling is expense is decreasing. So decrease in our current liabilities, decrease in cash. So you are minus 2,000. We are this two is getting reduced. So once all these changes applied, so net out of all this net flow, what is happening? 1,200. So 1,000 plus 2,000. So this much cash received, this much inflows is happening, this much outflow is happening. So net of 1,200 of inflow is there. So net profit from 1,54,000 plus inflow of 1,200. My cash flow from operation is 1,55,200. So you understand, right? So you can comment, you can comment and ask me for any queries. I will reply to that. And going forward, I will input one by one NCERTs and important BCom related BPM and commerce related cash flow statements sums here, so that you can understand and understand it, and it will helpful in your examinations as well as interview questions, and you can understand how the cash flow statement works. Okay. Let me know for any queries. Thank you. Please subscribe to Radha Krishna Edutech. Radha Krishna Edutech. Okay. Thank you.